Hey guys, how you doing? Kunal Desai here at Bulls on Wall Street. Guys, I'm going to teach you a trading strategy that I've been using for the last decade. By the end of this video, you're going to know a go-to trading setup, something that you can use every single day starting tomorrow. I use this setup when the market opens to make profits and only trade a couple hours every single day. It's a very simple yet powerful strategy that I'm going to be going into in detail. So, who am I? Well, I'm Kunal Desai. I am the CEO and founder of Bulls on Wall Street and Bulls on Crypto Street. I won't bore you too much with my resume, but let me tell you a little bit about myself. I had a job 10 years ago, just like so many of you guys. I worked in a cubicle. I was in sales on the phone as a headhunter, working day in and day out. But I had a crazy passion for the stock market, something that I had been interested in since I was in college. And I practiced day in and day out and learned for years to compile some of these strategies that I'm going to teach you today. At some point, I got so good at trading, I was actually able to leave my great job and go out and live the life that I had always wanted, which was to be a trader and to get out of Michigan, where I've been born and raised my whole life, and go and travel the world. So I've been trading stocks everywhere that you can think of for the last 10 years as my source of income. I've spoken at events all over the world, from London to recently I was in Tokyo, Japan, speaking to a group of future traders and entrepreneurs, showing them my life's passion and how to do it. I've taught literally thousands of students how to trade while actually trading in front of them. My personal belief about trading, guys, is that it's not something that can be learned from a textbook or a couple DVDs or even some weekend class. Trading has to be done in almost a university style setting. You've got to watch and learn, of course, in your book format, but then you've got to actually go out and learn live. And so I get out my trading platform day in and day out, and I show my students exactly what's going on in the market and what stocks or cryptocurrencies I'm trading right at that moment, so that they can see in real time what a real trader does. And I use a momentum-based trading style to do this. So in trading, guys, there's all different types of trading. You have value investors like Warren Buffett. You have people that trade earnings or trade dividends. There's so many different styles, and I've researched and practiced them all. But the one thing that I had learned when I was new, when I was trying these different strategies, was they all can work. But how do you take a small account and turn it into something much bigger? See, when you're a new trader, you don't just have millions of dollars in capital laying around where getting a 10% return makes a huge impact. As a trader, a new trader, I needed to turn a smaller amount of capital into something that I could grow, but also live on for income. And so the style that I use, using trend and momentum trading, I find is the best for not only growing accounts, but also extracting income so that you can get paid every single day. So who are we as day traders? Right? As day traders, it's really important to define what type of trader you are and the style of trading that you're going to be doing. As day traders, it's important to understand that there are 3 different stages of the trading day. You have your open, which is your 9:30 to 10:30 in the morning session. Then you have your middle of the day session. I believe that's 10:30 to 2 p.m. And then you have the close, your power hour. That's from 2 p.m. to 4 p.m. Monday to Friday. The trading strategies that you use for each one of these stages are different and need to be managed differently. When I was a new trader and I was learning different patterns, oftentimes I'd use the patterns that I had learned, but they would just fail. The pattern itself wouldn't work out. And so in my mind, I would always be thinking, man, I learned this pattern, I'm doing it right, but it's just never working. This thing, maybe this pattern is busted or this trading thing is not really working. But over the years, from tracking in my journal tens of thousands of trades, what I found out was that certain patterns only work certain times of the day. And so what we always need to be doing is matching the type of trading we're doing to the section of the day that we do it. So I primarily focus on the open, that 9:30 to 10:30 spot, right when the market opens. I love this time of day, guys. I love this time of day for a few different reasons. Number one, when the market opens, you're waking up, you're woken up, you're fresh, you're ready to go. I find that's when we're really at our peak mental facilities, I guess would be the term. That's where I really am thinking my best. But the open, in terms of the actual stock market, I find is the best to trade at because it is characterized by price discovery and volatility. See, at the open is where you get the biggest range of moves. That's where the biggest price movements happen throughout the day. Once we get into the middle stage of the day, what typically happens with most stocks is they either flatline or retrace in some manner. They digest that opening volatility. And so what I want to do is focus on the open, as waiting till the open passes gives away tremendous opportunity. A lot of traders you'll see, they like to stay away from the open because it's too fast. But I believe that if you provide structure around that opening time in the market, you can corral and harness that volatility and really get yourself into great situations where you have tremendous reward while really minimizing your risk. This is also great for people with full-time jobs, as you can be done as early as 10 o'clock Eastern time or 8 o'clock Pacific time. If you're on the West Coast, you can actually get your trading done before you even have to show up for work. I think that's a huge advantage. It's one of the reasons I love trading the open. Now, let's talk a little bit about a setup that I trade at the open every single day and what that setup entails. The pattern that we're going to talk about is called the ORB, which stands for opening range breakout. So what I'm going to do, guys, is kind of walk you through some of the parameters of the trades, and then I'm going to show you exactly how to enter and exit the pattern. Guys, I know a lot of you guys have probably tried trading in the past, or you've had different mentors or read different books, and a lot of times trading can be really confusing. That's how I was when I was a new trader. I'd go and read so many books, but then I would like try to practice what I learned, but like there were always missing pieces in the trade. I wasn't able to properly connect the dots. And my mentor, he told me something that has stuck with me for the rest of my life. And it's something that I tell my students every single day. I say, when you look at a trading setup or a particular pattern, I want you to look at it like a recipe in a cookbook. Have any of you guys ever opened up a cookbook to like bake something or do something? What do you notice? Well, when you open up a cookbook and you look at a recipe for, say, baking a cake, what you'll notice in a cookbook is that it's very succinctly and in a particular order, everything is laid out. From your ingredients to then all the steps that you need to see before you can actually get your cake at the end. And then what happens when you screw up the recipe or you actually miss pieces of your cookbook? All of a sudden your cake doesn't really taste like cake, right? And all of a sudden you've got this whole other thing going on. And that's what can happen in a trade. See, when you don't have the proper recipe and then you're missing a part of it, all of a sudden your trade can turn all sorts of different ways. And so it's important to understand what the recipe is for each type of trade that you get into. And then, of course, you've got to follow the instructions, and then you've got to do it over and over and over, right? And just like when you see your recipe in a cookbook and you do that recipe 10, 15 times, what happens? Well, then all of a sudden you don't need the recipe in your hand anymore. You can toss your cookbook, right? Because you have it down inside your brain. And now you're able to kind of experiment a little bit and put a little extra sugar or maybe bake it a little bit longer. And now all of a sudden you're putting your own twist and your own spin on your recipe. And now that dish is yours. And that's what all great traders do. And I think it's really important. But thinking about the recipe is what's going to really systematize your trading so that you're not reaching around when you get into trade trying to figure out, am I doing the right thing or not? No, you always just need to think like, am I following the recipe, right? Do I have all the ingredients for a proper trade? And if you do, there's a good shot that that trade is going to work out. It may not work out every single time, but what you'll have is probabilities that are in your favor that will start to play out long term. So let's talk about my favorite setup. It's called the opening range breakout, or the ORB. It's a highly effective day trading setup that gets you into strong momentum stocks really early in the move. So key characteristics of an opening range breakout. Well, the first thing that I do every single morning, I run a scan. I run a scan for stocks that are either gapping up or down at the open. And what that essentially means, for those of you guys that are not familiar with the term, is I'm looking for stocks that have had some type of movement before the market opens. It's had some type of press release or an earnings that have come out. And so now that stock is already moving around, getting situated even before the market opens. Why I like to play those type of stocks? Well, what I'm teaching you is a technical analysis setup, right? We're going to be using charts. But what we're going to be doing when we search for those gaps, that gap is because of a fundamental reason. Some type of earnings or some type of press release. And so when you have a stock that has a fundamental news piece out about it, what it does is it gives the stock extra power. That stock may have surprised with better than expected earnings or a bigger contract than was expected. So what you'll start to see is this big spike starting to develop. And so now what we're going to do is apply our technical analysis pattern to something that was fundamental about the stock. And that's how you can get really exaggerated moves in the market in those particular stocks. Otherwise, what can often happen is if you don't have that kind of right mix right there of the right earnings gap and then your technical analysis setup, oftentimes individual stocks, they just kind of follow the market, right? A rising tide lifts all boats. Well, most stocks are just tied to the S&P 500 or the NASDAQ, so if one of those goes up or down, then your stocks kind of just go up or down. But when you have a stock that's gapping up or down at the open, and it has some type of news piece out about it, what will happen is that stock is going to move independently to what's going on in the market because it's just released fresh news. The second part about that that's awesome is that when a stock has released fresh news, your technical analysis patterns and strategies that you learn, like flag patterns or an opening range breakout or numerous other patterns that you can learn in trading, they work cleaner and better with higher probability when you couple it with something that's got that fresh news. Because remember, it's going to move independently to whatever's happening in the market. The market could be tanking that day, but this stock's going to move the way it needs to because it's got that fresh news out. So I'm looking for a stock that gaps up or down at the open. I use a software called Trade Ideas to hunt for those gaps. There's a free website that you guys could use that's called thestockmarketwatch.com. And on that website, there's a tab that's called pre-market. And you'll see all the top gainers and losers of the pre-market. And those are the ones that I'm going to sift through to figure out which ones I want to trade. So that's a free website that you guys can all go on, thestockmarketwatch.com. And I'll make sure to post a link in here so that you guys can just click it. And then what we're going to look for, once we've figured out which of the stocks we want to trade, what we're going to do is wait for some type of consolidation range when that stock opens up. So the stock could open up 10%, 20%, 30%, sometimes even 50%. It doesn't matter. But what we're looking for is a very specific pattern and an angle on it that would tell us that this stock is ready for us to trade. And then what we're going to be doing is buying on the break of that consolidation. And don't worry, guys, I'm going to show you some examples. I know it's a mouthful at times. This setup is best within the first 30 minutes of trading in the morning. Some of the different indicators and charting that we use when we're trading this pattern. We're looking for volume. We add in moving averages. So I use a 9-day moving average and a 20-day moving average on my intraday charts. Then I use a VWAP indicator, and I'll show you this on a chart. And then what we want to do is always use a multiple time frame alignment, meaning that the stock that has that great earnings or that has that PR that's making it move, it's got to have a strong daily chart, which means it's bigger picture chart. And then what we want to be doing is aligning it with what we're seeing intraday. And that's what allows us to get into the play while ensuring that we're going to have a big time move. So let's take a look at some charts. And I'm going to kind of walk you through and reverse engineer what I was seeing in these trades when I took them. So this is a stock called Blink, B-L-N-K. So the thing that you'll see about Blink is that this stock had been sitting around really in the $1 range, $1.50 range for quite some time. So when a stock is just sitting around like that, I have no interest in it because I don't know when it's going to move. It could sit around in that range for months. And as you can see in this one, it sat around like this really almost the whole year, since February. So I have no interest in that because I don't know when it's going to move. But in the morning, when I saw this trade, I saw the gap in the morning on my gap scanner that I use trade ideas with. And I saw this stock gap from $1.50, and it was going to open at $2. So it's already up well over 20% pre-market. So it's going to gap up in the market. That gets me excited. See, a lot of times people see the gap and they say, man, I missed it. It's already up 20%. But guys, the thing that you've got to understand that's so powerful about trading is this. A gap signifies that news was out. The gap signifies strength in the name. So when I see the gap, now I know that it's game time for this particular stock. But the question always is, well, sure, but how do I get into it? Well, how you want to get into a particular stock when you find one that you like is by using patterns. A pattern is it's called a trading setup. Well, a trading setup is just a list of conditions that must trigger before a trade is taken. So when we look at an opening range breakout pattern, what we do when we see these is something that's just very specific. So when I see the gap up, what I want to be doing is waiting for a consolidation period so that I can buy when it breaks over. So as you can see with this blink, this stock gapped up all the way and ran about 250. Now I can't buy on that first candle. Anytime you buy in the first candle of the day, you can get wiped out because the stock could just come crashing back down. You don't know if it's any good yet. So what we want to be doing is waiting for a sideways consolidation on the name. When you get a sideways consolidation on the name, minimum 3 candles, and it breaks that consolidation, what we want to be doing is buying that break of the consolidation and then putting a stop loss, which is just an order that says, hey, if the trade goes against me, it's time to get out. And then we want to ride this thing up. So when this thing consolidates, minimum 3 candles after the gap, I want to be buying it as it's coming out of this consolidation range. You guys see this? Right? You get these nice tight candles right next to each other. So as this thing is busting loose, I'm going to buy this at $2. And I'm going to put a stop loss right under here. And now I'm in the trade. And I want to let the momentum take over. If you have a trade that has a PR, has a gap, and has that consolidation pattern, there's a good chance that you could get into something explosive. And you can see in this one, it ran right to 250 in just a handful of minutes. And each one of these candles, guys, is 5-minute candles. So when I look at my charts, I look at 5-minute candles, okay? And then what we want to be doing is really riding this stock up as long as it's trending. Now, on my chart, you can see I use a few different moving averages. I've got a 9 EMA, a 20 EMA, and a VWAP. A 9 EMA, 20 EMA, and a VWAP. And so when you get that explosive movement at the open and it starts to trend, I want to ride my stock up that 9 EMA as hard as I can till it breaks under. Now, along the way, what I'll usually do is take profits along the way. So I like to sell in 1/3. So I typically will sell some into the first spike, 1/3 of my shares. And I usually sell 1/3 when I start covering my risk. Meaning, if I'm risking 20 cents on a stock and I've made 3 times my risk, so if I made, say, 60 cents by then, I want to start looking at potentially selling out of it. And then I want to keep scaling out and selling 1/3 as it goes up. And use your 9 EMA as a guide so that you don't sell too early. And that's what's going to get you into this type of explosive name. Now, the other thing about this type of stock is that people always ask, well, does it work with any type of stock? Yes, it does. You can do it on small caps, large caps, any type of name that you see that has a good intraday range. So it's like a momentum stock that actually moves well. So this is a trade I took in TTWO, Take Two Software. So what you can see in the morning is this stock gapped up, right? So it had its earnings out. And then what I want to do once that gap comes up, I need to wait for 3 sideways candles minimum before I take the break. So notice how it runs up here to 93. Then I get 1 candle, 2 candle, 3 candle, 4 candle, 5 candle. On the 6th candle, it finally breaks its range. So I want to buy over here at $93, and then I want to put a stop loss right under this base over here so I can manage my risk, and now it's off to the races. As I start covering my risk, I want to look to sell 1/3, and then I'll keep scaling out, and then when it breaks under the 90 MA, I'll usually get out my last 1/3. Now, there are other ways to scale out. Some people will hold a stock all the way up, but I find, me personally, I'm always feeling a little bit better if I pay myself, right? I'm in front of the computer. I did my homework. I got to get paid. So I always scale out of my trades. That way I'm consistently taking profits and padding my account. Now check this out. This is Best Buy. So look at with Best Buy. So you can see here on the daily chart, you've got a nice trending stock and you've got a breakout over this range. See this big gap? So now intraday, remember I use 5-minute charts, we get this big gap all the way to about $56. Now I don't want to buy that first candle. I got to wait minimum 3 candles. So 1 candle, 2 candle, 3 candle, 4 candle. On the 5th candle, it breaks its range. So you want to buy as it's breaking the range and put a stop loss under the base at the lows. And now you're in the trade for a nice runner. And look, Best Buy's a big-time company, right? You don't just have to do this on small caps. You can actually do this on any type of stock. Netflix. I have been trading Netflix for almost a decade. It's one of my favorite stocks to trade because it's always got a really nice range that it can move. So what do you see with Netflix? See how it's breaking out its highs over here. So it's coming out of that big consolidation, which is great. That means I want to be in this stock. So if I want to be in the stock, now I've just got to find the moment where I can enter. So look how we have it. So we got this gap up over here, and then a 1 candle, 2 candle, 3 candle, 4 candle, 5 candle, 6 candle. On the 7th candle, it starts to break out. So we want to buy it as it's starting to break out, and then just put our stop loss under that base. So you're going to risk maybe $1 or $2 on this name, and now you're in this thing for the potential run, right? If I'm going to risk $1 or $2, and I can make potentially 10, that's a nice, steady trade. Now, for me, I trade small caps and large caps. I don't discriminate on them because I know that even on a larger stock, even if I had 100 or 200 shares of Netflix, if it's going to move $10, I can make a nice gain on it. If I had a smaller account and I could only buy 50 shares, well, I could still make a really nice gain if I got $10 on it. And so don't be afraid necessarily of trading higher price stocks. Not always is lower price stocks the way to go. What we're in the business of is trading the best patterns, irregardless of the price of the stock. Now check out Baidu. So notice how this thing is breaking this big range over here. So notice how it's been trapped under $200. So it gaps up. That gets me really excited because now I know that this thing's going to be in play. I've just got to wait for an entry. So now we gap up here, and I've got to just wait. I have 1 candle. Next candle, see how it goes down. So, right, that's why we don't buy that first candle. 3rd candle, 4th candle. On the 5th candle, it starts to break out. So we want to be buying as it breaks out and put our stop loss to manage our risk right under here. So we're going to just risk a couple dollars, which on a $200 stock is like 1%. And now we're in this thing to potentially get into a much bigger run, right? And as always, we want to scale out once we start to cover our risk. Now, this is the beauty of the markets. Guys, you don't have to just trade on the long side, meaning buying stocks. Just as many times as I buy a stock because it's got great earnings, I short stocks, meaning I bet on them to go down when they have bad earnings too. So like this is a trade that I took on ZAG. So ZAG is a $13 stock, nothing too crazy. But what do we see here? So it starts to gap down on its earnings. So notice how it's clearing this big range. I like when my stocks clear that big range. Now what we want to be doing is intraday waiting for our 3 candle minimum pattern to get into it. So we gap down. Now we got 1 candle, 2 candle. The 3rd candle is up here. 4th candle, it breaks down. So as it's breaking down here, that 13 level, I want to short this thing. I want to short this thing, and now I'm in this thing for the ride down. Okay, guys? That's the beauty of this type of trade. They work quick, and you can really minimize your risk on it. So, guys, let's talk a little bit about peak performance. So as traders, knowing patterns is not the only thing that matters. Otherwise, right, we would all just read some textbooks and we'd be making millions of dollars. We can't think of trading like that. It's a job. It's no different than being a doctor or a lawyer. Trading is hard if you make it hard. But how we make it better and we make it legitimate in terms of a job is we've got to reach that peak performance where we can apply our book knowledge in real time in the stock market and do it on command. Can I get my fingers to do what my brain knows? You know, that's the hard part for traders sometimes. It's like they know what they're supposed to do, but they don't do it. And that happens with anything in life, right? People smoke cigarettes when they know they're not supposed to, right? Sometimes we drink too much when we know we're not supposed to. We have that extra slice of pizza. I'm guilty of that many of times. Just did it last night. We have that extra slice of pizza when we know we really shouldn't have it. And trading can be the same way. But how we get through that is by really building out our peak performance. So what makes a trader go? Well, number one, you've got to have a group of go-to setups. Go-to setups that you know the recipe to. So I trade 18 different patterns. I've got 4 patterns that I use in the morning, a few that I do in the midday, then I've got a few that I do end of day, then I have longer term patterns like patterns for like investments or longer trades, but everything comes down to a recipe. Each one of those patterns, I have a specific set of rules and a specific look that it's got to show before I can enter it. And I call those my go-to setups, which is something that, you know, I spend day in and day out with my students, like hammering it. If it doesn't have a pattern, there's no trade. No pattern, no trade. No pattern, no trade. If you can't tell me the recipe for your trade, that's a trade you shouldn't be taking. Number 2, routines. How and when you find stocks. So you've got to have a specific routine when you wake up in the morning and you get ready to trade. Or, you know, you can do that routine at night. But for me, it's scanning, meaning I use my software where I have my charts to hunt for trading ideas. Then I start to analyze them. Then I fill out my trading journal for trades that I took the day before or this and that particular day if I'm doing it at night. Your journal is very important because you can pinpoint your deficiencies. Number 3, collecting and analyzing data. Data is the most important thing that a trader can have in their toolbox because it allows you to make decisions from something that's concrete, from a position of strength. You have concrete evidence that something's working or not working. And guys, that's just huge, right? I need to have evidence. And so like for me, I have data on every single one of the patterns I do. If you tell me, Kunal, how do you trade a VWAP pattern? I'd say, well, I do that at about a 66% win ratio, but I tend to trade it a little bit better in the morning than in the afternoon. So I have very specific data. So I know when to apply my strategies and at what time. The data also helps you when you're getting into a slump, right? If you're into a slump, oftentimes there's 1 or 2 things that will get you in trouble over and over and over. And that's just huge. Knowing that where you're missing can keep you away from a lot of trouble. When one of my students comes to me and they say, Canelo, I'm having trouble with my trading, well, the first thing I'm going to ask them is, well, send me your trading journal. Let's take a look and see where you're going wrong, right? If they don't have that, then we're just playing this ambiguous game of, well, all right, tell me what's going wrong. And people will be like, oh, well, I'm not taking my profits, I'm over trading, right? And they just give you a canned answer. And then it's hard for me, the stock doctor, to get in there, right, and help make real changes. But if you have the data, I can fix what's happening in a couple minutes. And then over time, as you're getting more experience, you can look at your data and make your own fixes in an instant because you know exactly what's going on. Number 4, knowing your personal patterns, right? We all have personal patterns in our lives of things that get us in trouble, right? We all have those things that kind of get us in trouble or cause us stress. Well, in trading, it's the same thing. If you don't sleep, if you're somebody that needs a lot of sleep or a good night's sleep and you don't have it, well, that could impact your trading. So, you have to see like, okay, why did I trade bad? What was I doing in my life? Sometimes there could be people in your life that just tick you off, right? I've had that, right? A girlfriend, wife, mom, your boss, whatever it might be. Sometimes when we're angry, we don't trade well. So like knowing like, okay, this person's been agitating me all day and now I'm going to go try to trade, that doesn't really lead to good trading, does it? And so knowing your personal patterns can keep you out of a lot of trouble. I've had that throughout my life, and different personal patterns will creep up. Sometimes like when I was a newer trader trading professionally, if I lost on my first trade in the day, guys, like my next 2, 3, 4 trades were always a hot mess because I'd lose on the first trade. I'd get stressed out, be like, oh my gosh, like I can't believe I lost. And so my second trade would be a little bit more sloppy, and then the third trade, and now you're reaching, right? You're kind of desperate to make a good move. Those are the things that can kill you. Visualization, right? Visualization of really thinking about your day and how you're going to trade these stocks before the market even opens. If I have a list of 10 names that I've run my scans through, before the market opens, I'm already visualizing like how I'm going to trade that particular stock. How I'm going to enter this, like what patterns do I need to see? So I'm already kind of replaying out the day, but before the day even happens, and that's going to be huge. And then number 6, building a winning mindset. Surrounding yourself with good people. Surrounding yourself with a coach or a mentor or friends that are like-minded, that lift you up, and reading and exercising, doing the things that whatever it is that make you the best you are. And everybody's a little bit different. For me, like I like to take a walk in the mornings. That really helps me recharge. I listen to, audiobooks or maybe some motivation, something that's really motivational, right? These are things that can help you build that winning mindset because that's all it is sometimes. You've got to change that attitude and put that belief in yourself that you can do this. And that comes from hanging out with the right people, but also from your preparation, right? Your preparation is what gives you the confidence to go out and attack it, go out and hunt for your dinner, right? Which is what we're doing in the stock market. We eat what we kill, right? You make the money and that money goes in your pocket. And so building that and being on the hunt, that comes from your preparation. When I studied the markets in the morning and I spent some time and I got ready for it at night and that market opens, I'm ready to eat, right? Because I've been preparing for that market to open. So that the easiest part of my day is the actual trading. The hardest part of my day is all that legwork that I need to do before the market opens. But when I do that legwork, I know that I'm going to have a great day. So what does your perfect day look like, right? Always remember, you control your preparation. You control your effort. You don't control your outcome, but you do control your process. So I gave you a handful of things that I believe You need to be a great trader, from analyzing your data to building that winning mindset to having your go-to setups. Well, what are your perfect days? Think about the things that you need to do every day to be successful. You know, when I talk to my coach, Mr. Ben Newman, that's the thing. We have a perfect day lined out. We always work it backwards. What are your goals? And then what do you need to do on a small bit every single day so that you hit your bigger goals? So if I have a goal for the year, I want to make this much money, or I want to look like this, or whatever it might be, well, you don't just hit it. That comes in from that day in, day out, banging the process, right? We control that part of our days. And so really think about what makes your perfect day. Have 5 things or 6 things, nothing too crazy. And make sure that those things lead up to your bigger picture goal. Guys, I'm going to give you our Intro to Trading course at a huge discount. Normally, it is $397. I'm going to give it to you guys for $97. That's $300 off. Use this coupon code BULLS300 and kickstart your trading education. You're going to get with this immediate access so you can start learning right now. This course teaches a strategy-based system for identifying and executing swing trades, which is your longer term trades, those 2 to 5 to even 10-day type of holds. They're perfect for people with jobs that can't monitor the market on a minute-by-minute basis. And then, of course, my bread and butter, which is day trading. Guys, I believe you should know both. When I started Bulls on Wall Street, I was primarily a swing trader because I had a job and I was coming out of that, and that's what I had always done. And so I think that learning both is going to be a huge help for your long-term success. This course is also going to talk heavily about how to manage risk, identifying high probability trading opportunities. If you want to learn the market essentials that you're going to need to become a winning trader, to get that mindset, start right here. So what you get in this package, we've got market essentials, technical analysis and charting. I'm going to show you exactly how to set up your charts, what platforms to use, free ones and paid ones. I'm going to show you all the different indicators that you'll need. We'll talk about selecting a broker, trends, and then I'm going to show you a few strategies that I like to use. A flag breakout strategy, a flat top and base breakout strategy, moving average pullbacks, pullback to price support, and then our risk management on how to actually manage our money and our trades. Guys, to learn more, you can visit us at bullsonwallstreet.com. That's my website. My Twitter, my Instagram, you can always follow and find me at Canal00, or you can even hit me up by the phone, 517-974-1480. Guys, that's my personal number. That's my cell. I went to Michigan State, which is why I got a Northern Michigan number. I don't live there anymore, but I never had the heart to change that number. I look forward to hearing from you guys. Take advantage. You know, I love talking to people about trading, so do it. And you can always email me, canal@bullsonwallstreet.com, or Mary Beth, my business partner, who was also one of my first students that runs some of her educational programs with me side by side. Her email's marybeth@bullson.ws. Guys, every single elite performer has an elite and involved coach. To this day, I have a coach. Not for trading, but I have a coach for business and one for performance. We all can learn something from somebody else. And I'm pumped and honored to be your coach. I would love to get my hands on you guys and really show you the market, something that's gave me so much in my life, and I'd love to return the favor and show you exactly how I do it. Guys, take care and God bless.